Welcome back to Bonex Investment Group. In this video, we are going to talk about a simple weekly trading pattern that occurs almost every week. Would you believe it that there is a setup that occurs almost every week and it occurs at the same point of market flow? Consolidation may be issued, but if you understand where this will be placed, you'll be ahead of the crowd. Basically, you know when you are going to act. So in this video, I'm going to break down something that would surprise you. Something simple, but yet very powerful. I understand that a lot of people would love to trade something that is very difficult for them to believe it is powerful. But for this one, it's contrary to that. All right, so basically we need to first define the market maker's weekly cycle for us to understand this particular pattern. By the market weekly cycle, we have levels whereby we talk of impulses to the downside or to the upside. Whenever we see 3 days in one particular direction that are breaking the law of the previous day or breaking the law of the previous consolidation, we call it a level. And when we have 3 of them, we actually expect to reach the step 1 of the setup. We are not going to be trading within this particular region because this is where market makers manipulate as well as induce traders in the opposite direction. So we want to enter after the validation of this particular zone. All right, so basically we are saying the market cycle is structured with levels. Like in this particular case, you can see this is H1 time frame, mind you, and we have days, day 1, day 2, and day 3. So in this particular case, we are saying to simplify the levels, we are going to call them days. So basically we had a day of rise, another day of rise, then another day of rise, like that. So 3 days of rise or drop results in a zone of reversal. So this is a zone of market reversal, and this is the first step of the strategy. And we count levels to examine the reversal characteristics, right? So we want to see if this particular zone satisfies what we want to see for us to get ready to enter the market. So here are the reversal characteristics before we proceed to the entry point, which is step 2. All right, so basically we are saying step 1, it is to count days of rise, 1, 2, and then 3. At the 3rd day, that is when we start to look for what we call double break of structure, whereby we can see that it gives us a peak, like in this particular case, then it breaks that peak, right? So break of structure to give us another high like this. So this particular setup or arrangement of flow is what we call manipulation. You can see that the market makers break structure to create a high, whereby a lot of people would actually go along with this particular break of structure later to be taken out. And then we want to see another break of structure, which is breaking of the last low like this, right? So after breaking of the last low, we are now getting ready for step 3, which I'll show you shortly, right? So basically step 1, counting of levels. Step 2, break of structure twice, which is validation of the reversal region. And then let's go to the strategy explanation. So look for days of flow, which are level 1, level 2, or day 1, day 2, day 3. At day 3, we need to see a break of structure twice, as I've showed you. After the second break, which is the second break, we are saying first break, then second break, which is this one. We want to see a pullback to the 50. So after the second break, we want to see a pullback to the 50, and at the 50, there should be signs of reversal, whereby we are now continuing. Stop loss above structure and take profit at 2R. I understand that this may not mean anything. We need to go over the charts so that you fully understand this particular strategy. But before we dive into examples, I want to personally invite you to my one-on-one mentorship program. If you are serious about turning your trading into a powerful and sustainable source of income, this is for you. Use the link in the description box below. I only take a few students on a first-come, first-served basis. Let's jump in the examples. All right, so basically what we see here is odd against US dollar, and this is on H1 time frame. I've actually gone back to June so that you can see what we want to achieve. We can see this is a day of drop, and we've said that is the first step to count the days of drop so that it will not be subjective. So we had a day of drop that broke the low, and this was a day of drop but failed to break the low, and the low was broken here. We've said at the third day of drop, that is where we want to see or to validate the break of structure twice. You can see there was break of structure here, which actually occurred, creating this particular flow, and then we had another break of structure that occurred here. So we had break of structure twice, and we've said the next thing is now to get an entry at the 50. We can see the market coming to the 50, and it went right in our direction, right? So we need to actually have much more examples for us to fully understand, as well as to fully comprehend what I'm trying to put across. We can see this is a day of drop, and we had another day of drop that broke the low of the previous day, and we had another day of drop, which is at this particular point. So in this particular case, we can as well see the same scenario like the one that we saw earlier. We can see break of structure that occurred at this particular point, and then we can see another break of structure that occurred here. And what is the next thing? I'm sure you now are aware of what we are waiting for. We can see the market going above the 50 and then coming back to the 50, and you can see that there was a very, very big move. So here we can as well see what happened. We can see the first day of a rise again, and after that first day of rise, it was this particular flow, and then we had, this was not a day of rise, a day of rise here, and after that day of rise, what happened? It broke the high of the previous day of rise, which is this particular point, and then we had the third day of rise, which is this one. On the third day, what did we get? We can see that there was a break of structure here, and we had another break of structure here. And after that breaks of structure twice, what did we get? We can see there was this particular pullback to the 50, a railroad track was issued, and we had a very beautiful move to the downside. Continuing again, we can see that there was another level, then we had another day of drop, which is this one, and then we had the last day of drop. This was not a day of drop, and this is the last day of drop. On the last day of drop, what can we see? We can see that there was this particular break of structure to the downside, and then break of structure to the upside, and then at 50, of course, there were a lot of traps that were issued, but this is actually another way that I discuss in the one-on-one how to enter using or enter at these trap levels like this, and it actually went to the upside. We can continue with the wall chart for you to understand, but you can as well do that for yourself. It's basically counting of levels, and then after counting of levels, you need to see break of structure twice. After break of structure twice, you need to see a shift and then a pullback to the 50, basically like that. On that note, we've come to the end of our today's video. Thank you for watching. Like and subscribe, and I'll see you in the next one.